Bitcoin could be getting ready for a double bubble kind of scenario. Essentially, that we had one big market just boorah earlier this year, and later this year, we're going to get a second, bigger, crazier pump in the cryptocurrency markets. Bitcoin could see another 200 or 300% gains during that time. Now, Bitcoin, it's the tip of the spear, and it's going to be the focus of this video, but if Bitcoin goes up 200 or 300%, you do realize what's going to happen to the rest of the cryptocurrency market, right? All your big cap altcoins, they're going to go like 5, 10x. Your low cap altcoins, they're going to do like 50, 100x moves. Good times will be had. Yes, good times for all. It'll be great. My name's Lark. Every day I talk about cryptocurrency investing here on YouTube. So if that's a topic that you're interested in, you'd like to know some more about, you'd like to keep up the updates happening in the crypto space, you should really subscribe to the channel, man. Also, if you do enjoy this content, I would really appreciate a quick tap on that thumbs up button just for the YouTube algorithm. You know, YouTube, they're crazy about the thumbs up button, man. And click on the notification bell if you'd like to get a notification when I put out a new video. Now, real quick as well before we begin, if you want to earn some safe, simple, passive income on your cryptocurrencies, you need to check out Celsius. You can get 6.2% APY on your Bitcoin, 5.35% on your Ethereum, 8.8% on your dollars, and great rates for a range of other altcoins. Use the link down below to start your account, and you can get a $50 Bitcoin sign up bonus. So go ahead and check that out using the link in the description. Now, let's get into our topic here. I've got a lot of different charts to share with you today. So we'll start off with this. Bitcoin's net unrealized profit loss chart is moving back into the belief zone with a strong breakout, making a double pump scenario more likely. So let's go ahead and pull this chart up here so we can see that when we have had these moves back into the belief zone, before that is of course where we see green on the chart here. Now sometimes that is the final just exit pump before a terrible, brutal, savage bear market where there's gnashing of teeth and pulling of hair. That happened in 2014, that happened in 2018, and of course we had our 2019 bear market rally here. Now what we are seeing currently is we've had this massive run up. We never actually got into the euphoria greed zone, which I also find very, very interesting. And now we came back down and we are getting ready for the next market move. Now, some are saying that this is indeed the exit liquidity pump for the whales, but I think this has rallied too far. It's gone up too high. You can see back here, they just nudged a little bit back over the line here, just got back into the belief zone, just barely got back into the belief zone here. What I am seeing, this looks a heck of a lot more like 2013's double pump, the double bubble. So we can see here, of course, we had a big market run up, big market cool down that actually lasted for a few months' time before we started seeing the price push back up towards new highs. And of course, we saw this situation here where we had a nice, big, strong breakout. Now, what's that look very reminiscent of? What we're seeing right over here, a big, strong breakout on the chart here. So that could indicate that we are getting ready for this big double bubble kind of situation where the end of the year goes absolutely freaking crazy. Also, at no point during the bull run up until now did we actually get to, let me just take myself off the screen here, did we actually get to a point with the Puell multiple where we had a basically, this is the top signal. That would be, of course, the price trading up here, the indicator trading up here into the red box. We did, however, get this, which was a very strong buy signal. That was right around the time of all the China FUD that was going on. So now we are recovering again. Now, it's not to say that a cycle can't end without, reaching this level, but it just hasn't happened before. We've never had a cryptocurrency cycle market top that has not got up into this red box. We have not yet reached that. We came close, but we didn't reach it earlier this year. I think that we could now be setting up to make the run towards that truly overbought situation for Bitcoin here. Next up, let's have a look at the Pi cycle top indicator. Now this, of course, is a very accurate indicator that did indeed call the rollover of the market earlier this year. So we had our, basically, the indicator flashed market top here. That was indeed the market top. After that, the market did indeed roll over pretty heavily. Now what we're seeing here is it actually starting to slowly curve back up. We haven't got it actually going back up yet, but a quick price move could really just angle that back upwards. Now what's interesting is that we do have precedent for having this top signal come in and it not actually being the end of the cycle. So the Pi cycle top indicator has been right sometimes before, but it's also given almost a false indicator before. So in 2017, it called it spot on. In 2013, so what did we have happening back here in 2013? Well, we had our bearish crossover here. And then, of course, we had another flip back over to a bullish crossover here. So we had our bullish cross here, our bullish cross here. And then later on, our bearish crossover happened that it did indicate the end of the market cycle. So again, we could be in that situation where we are basically looking at the double bubble, the double pump, much like we saw happen in 2013. So there is precedent for that, and the Pi cycle top indicator is not a perfect tool, although it did call the recent top quite well, and it called the top in 2017. It actually gave a bit of a false indication back in 2013. Next up, let's look at the Bitcoin Bubble Index, which has seen a significant recovery in the last few weeks. So we can see it's a very interesting chart here. So if we're looking at the chart on top here, so right now this is us. We've had this massive run up, massive retracement, and now we're having a strong move back up again. Now that does not look at all like what we saw in 2017. This is 2017 right here. This is 2017 right here. You can see much higher. This is a bubble reading, right? So that was more of a market bubble blow off top that happened right here, right? Whereas what do we have? Look back in 2013. We had one massive run up, big decline, another massive run up, which ended the market after that. You might even be able to compare what we are seeing right now to this early 2017 action where we had a massive run up, big correction, another run up, bit of a correction, and then of course the blow off top that came after that. But either way you want to look at the data, this does not look like a blow off top, much like we saw here or even here. These do not look like blow off tops because this is not a blow off top. Even here in 2019, that's a blow off top. We did not, again, get that same kind of structure happening here. And now, of course, we're getting this very, very strong reversal coming in. So that would indicate that we are getting ready for the double bubble. Now, Bitcoin, it does have a habit of making dramatic blow off tops. So what happened in the last few bull runs? And I think this is really important to point out because one thing that I've heard people say is that, look, come on, man. Get off the hopium. It's too much. There's no freaking way that Bitcoin is going to go up by that much in the next few months. Impossible to see $100,000 Bitcoin by the end of the year. Definitely not going to see anything over $100,000 by the end of the year. Well, history, my friends, would disagree with that sentiment. So here's what we can see. Let's go back, and this is the 2013 bull run. So of course we saw a massive price appreciation. We actually saw a 76% correction. We only saw a 50% correction on this current market correction that we've seen for Bitcoin. Of course, we're coming out of it now, but anyway, we're not talking about the corrections. We're talking about the pumps. So in 2013, what happened? This was in Q4. We saw the price go on to claim a new all-time high and to rally 337% over the previous high, which was established earlier that year. More than 300%. And you say, oh, okay, Lark, but that was just 2013. Surely it never happened again. Well, it actually happened again in 2017. So in 2017, this is from August 20th until the high at the end of the year in the last week of December. Price rallied 341%, went from $5,000 to $20,000 in the space of 3 months. Now, if that were to happen this time, that would actually see Bitcoin going up to $200,000 freaking dollars. Potentially. It depends on how you want to look at it. If you want to take it from the previous top, we're going to be getting up over $200,000. If you want to take it from the current price, we're going to come in just a bit shy of $200,000, but definitely over 100K. And look, let's say that if we just don't pump as hard this time, we only get up to 100K or $105,000. Well, that's 120% from here, for example. And that's just not that crazy. Bitcoin has a history of proving that can happen. And now you might say, oh, come on, Lark, but it's different this time. You can't really compare it. The market cap was so much smaller back then. Yeah, the market cap was smaller back in 2013. The market cap was smaller back in 2013. I agree with that. But back in 2017, 2013, you didn't have the world's biggest banks selling Bitcoin to their customers. You didn't have PayPal selling Bitcoin to their customers. You didn't have 40,000 Bitcoin ATMs across the USA, and so on and so on and so on. There's so many more fiat on-ramps, which means the price can pump so much higher because so many more people can bring their money into this asset class. And come on, it's like $1.2 trillion market cap right now. It's a freaking baby. I like this chart here from Charts BTC. So we can see that when 2013, we had 52 new all-time highs. Let's bring this a bit closer here. So we had 52 all-time highs for the market cycle in 2013. Of course, we had a big pause in the middle there while the market took a big deep breather and then, of course, recovered later on. We had 74 all-time highs for Bitcoin in the 2017 bull run, with also a pretty big gap here and a pretty big gap here and a pretty decent gap here. So we had some very big corrections along the way. Right now, we've only had 30 all-time highs for this current market cycle. Are you really telling me that's the best we could do? We couldn't even get more all-time highs painted in than 2013? Come on, man. You know what's up with that. That's ridiculous. This is definitely a situation where we could see an even bigger number of all-time highs coming in, right? Maybe we get 100 all-time highs and we're going to see the market recover back up and all-time highs, and it's just going to pump for months on end. Possible. Well, we'll see, of course, how many all-time highs we get when the market has rolled over later on. But here's a great one that Carl from the Moon shared. This is just an interesting pattern of how gold compares to Bitcoin right now. You know, history doesn't repeat in markets. So this is, by the way, the 1975. The market cap of gold peaked at $1.2 trillion, then corrected down by 50%, then shot up to a $5 trillion market cap, looking very similar to Bitcoin in its overall pattern, plus a $1.2 trillion market cap for Bitcoin is where we topped at in 2021. Then we corrected down by 50%. So if we see that kind of situation happening again, that is potentially looking at the price of Bitcoin rallying up to over $200,000 per coin. Very, very bullish. Very bullish. Again, history doesn't repeat, but man, it sure does rhyme sometimes, doesn't it? I mean, come on. That's pretty interesting, right? Now, I posted this chart back in January. This shows basically the market cycles that we've seen playing out for Bitcoin over the last few years. So we can look back here in 2013. We had a 378-day basically bull market from the time of the Bitcoin halving. This is measured from the time of the Bitcoin halving. 525 days from the time of the Bitcoin halving to the 2017 Bitcoin price peak. Now, of course, we are in a situation where we might actually see the cycles getting longer. So this is a theory that's been talked about by quite a few different people. And basically, the idea here is that the cycles are getting longer and the returns are getting a bit smaller every time. Now, in some of these early Bitcoin price rallies, we just saw that the percentage gains being totally off the freaking charts. And we're seeing massive percentage gains here once again in these current rallies. And if we get Bitcoin going up to $200,000, which was, again, I posted this back in January, was my potential price target here for Bitcoin, that at least we're going to get up to a 6-digit Bitcoin. Potentially we could see the price rallying up to $180,000, $200,000 by the end of the year. And as we just established, Bitcoin can do that. It has a history of doing that in Q4 of a bull run. It's happened twice before, so could very, very well happen again. Or if we are facing the lengthening cycle theory, well, maybe this bull run actually rolls over into 2022 and we don't actually see that blow off top until, February, March, April, something like that. Then we get our $200,000 Bitcoin. Bitcoin only makes it to $100,000 by the end of the year. Oh, that'll be so tough. So it gives you that perspective of what the market is capable of doing and really how far we've come so far. If indeed $65,000 was the market top, we're about to go into a new bear market. This was then the shortest bull market, and it's the bull market that had by far the smallest returns. And I know we talk about diminishing returns, but it's not that dramatically lower compared to previous cycles. It'll be less, but not magnitudes less. And if we get up to a $150,000, $200,000 Bitcoin, that is a diminishing return percentage-wise. Obviously, the price has gone up significantly, but the percentage pumped is less than previous cycles. And it, of course, may also take longer. Anyway, what could happen between now and the end of the year that could cause such a crazy price rally to happen for Bitcoin? A Bitcoin ETF being approved in the USA is the most likely price catalyst, and that could actually cause the markets to pump longer than we expect. And yeah, maybe we do get a new bear market that comes into play in 2022 sometime, but it may not go down as much either. We may see the price only come down 50% instead of 85 or 90% like it has in past bear markets, And we could also, of course, see maybe we don't get the Bitcoin ETF catalyst. Maybe that comes in 2022, but by the end of the year, maybe we start seeing Microsoft and Apple and Facebook buying Bitcoin. Come on, if we see that kind of situation happen, that's going to cause a massive, massive rally. Look what Tesla did. Look what MicroStrategy did. What if the big boys like Facebook and Google and all these guys start buying Bitcoin? Come on, man, that is going to cause a crazy, crazy price rally is what that's going to do. Anyway, those are just my 2 Satoshis for the day. Your question. Do you agree with my thesis that we're essentially going to see a massive round 2 for this bull run? That the end of the year, into 2022, we're going to see the markets just going crazy? Or are you in the bear camp? Do you think actually this is the exit pump, Lark? Time for everything to go down by like 90%. Curious to hear your opinion down below in the comments section. Thanks so much for watching today's video, and peace out till next time.